Hello, this is Tom Lee. I'm the Chief Investment Officer of Fundstrat Capital and the Portfolio Manager for the Granny Shots ETF, ticker GRNY. This is our update for the week of December 1st, 2024. A few of you asked us about the expense ratio for this Granny Shots ETF. The expense ratio is 0.75% per year. That expense is taken out every day. So when you see the performance of Granny, and anytime we talk about performance, it is actually after expenses. Total assets of Granny have reached 470 million. I'm going to start with addressing a few questions and queries we received. Will you allow for options trading on Granny? In fact, since November 25th, options have been available for the Granny Shots ETF, ticker GRNY. We also received this comment. The Granny ETF has made my life easier than building my own Granny Shots portfolio. That's actually true in the sense that an ETF is very tax efficient because anytime we're making quarterly changes in our Granny Shots portfolio, they are not triggering capital gains and therefore not creating taxable events. I would encourage you to subscribe to our YouTube channel at Fundstrat Capital. That's where you can find these updates, and you can find these on x.com as well. For the past week, Granny Shots rose 0.36%, but the S&P rose 1.08%. So Granny's underperformed by 71 basis points. Now that's disappointing. But since inception, Granny Shots have gained 3.54%. The S&P up 1.86%. So Granny Shots are still outperforming since inception by 168 basis points. You might wonder what caused Granny to underperform in the past week. Well, part of it is actually sector relative performance. The S&P had, in the past week, defensive leadership, as you can see here. And the reason for that mainly is that investors have turned a little bit bearish. You can see this in the AAII sentiment survey, and I've highlighted in the bottom right, the percentage of bulls less bears dropped to -2. Well, that's investors turning quite cautious, and therefore defensives outperform. But we want to highlight that that is not how we want to position our Granny Shots portfolio. In our most recent rebalance of the Granny Shots portfolio, we identified growth cyclicals as having the highest probability of leading over the next 3 months, and that would carry us through early January. And therefore, instead of being defensive, which is this bottom left corner, we're actually tilted towards pure growth and growth cyclicals. Now, in terms of contribution, the top 5 performers were Amazon, CBRE, Apple, Meta, and Alphabet. If you're wondering why, part of this has to do with the fact that we're entering the important holiday season. So there's going to be some decent spend by consumers. In terms of bottom 5 performance, the worst performer here is CrowdStrike, down 7%. They reported earnings. Actually, they beat numbers, but sometimes you can beat numbers, but it's not good enough. And that, I think at the end of the day, CrowdStrike remains central to portfolios because of the role they play in terms of cybersecurity and how important that is going forward. Now, ultimately, you may not be too familiar with our Granny Shots, so I just want to cover this again. We have 7 portfolios. We look for stocks that appear across multiple portfolios. And again, these highlighted here appear the most. So for instance, Meta is in 5 of the themes. And if you need more information, please go to our website and grab the fact sheet at grannyshots.com. And this is the portfolio management team. Thank you for listening, and I will speak to you soon.